This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, as always, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Why should you scan it? Well, that's because every morning I do post a significant amount of research that I type up in the previous night, and it can be really beneficial as we go into the new trading sessions. You know, there's loads of graphs, etc., and just loads of overgeneral research. So definitely go ahead and scan that QR code. Let's have a look here at the S&P 500. Yesterday we ended the market. We ended the session in the red territory, and today we're up around 0.2%. So you could argue that we are flat. But today is a very big day. I'm very excited. I've had my coffee to start off the morning. I've done my research last night, which I posted over on my free analysis group. And I'm pretty confident going into today's trading session that there will be a nice rally in the markets. You know, we've got the Fed coming out. We're all expecting them to hike by 0.75 basis points. We're starting to see cracks amongst other central banks globally. For example, I think it was just yesterday where I mentioned that the Bank of Canada only hiked by 0.5 basis points last week compared to the 0.75 basis points that was expected. We saw cracks in the gilt market over in the UK. There's liquidity issues in the US. So I feel like the Fed has a responsibility today to come out and just, kind of give a hint. Not a pivot, because by a textbook, a pivot is when the Fed starts to cut interest rates. That's still a very long way off, but I feel like the Fed has a responsibility just to come in and reassure that, they are not going to continue to hike at 0.75 basis points every single month. We know that, we know that one day they are going to have to come out and say that they are going to slow the pace down. And I feel like there's a very good chance that could be today. If that is the case, then you could expect the markets to rally significantly. But going into today's meeting, what am I looking for? I'm looking at this chart here. I'm looking at the 10-year Treasury yield market. We're currently trading just above 4%. Yesterday, we had a very nice move down towards 3.9%. If we break below the swing lows that we've hit over the past couple of trading sessions, then I think that the yields could potentially drop down to 3.7%. And if that is the case, guys, then you are going to see a big rally in the stock market. And then vice versa, if for whatever reason the Fed come out and they did strike a very hawkish tone and there was no signs or no signal that the Fed is going to potentially slow the pace of interest rate hikes, then we could see the yields pop back up towards 4.25%. And of course, that would then cause the stock market to decline. So I think I'm looking at the S&P 500 here. If we just quickly go onto the hour chart, you'll see that we're trading actually in quite a nice uptrend. So let me just get that up for you. So this is it in the 1 hour chart. Just zoom out a bit. Sorry guys, just sorting out my chart. Here we go. Yeah, so this is the uptrend that we currently find ourselves trading in on that hourly chart. And again, if we saw those yields got to 4.2%, then I can expect to see the S&P 500 decline to around 3,840. But I think that there is an excellent chance that this uptrend still holds despite what the Fed says later on today. Seasonality-wise, we are entering a very strong period with the midterms as well next week. So I've been, I've basically been cheering for an end-of-the-year rally here, and I still believe that is in the cards, and we could likely see the S&P 500 trade up towards 4,000, especially as other industries now start to lead the market, such as industrials, financials look like they're about to break out. I was just discussing that on my free analysis group, and also energy, guys. Energy is very, very strong at this moment in time, and of course these are massive components in the S&P 500. But again, one reason why I really do believe we could have a fantastic rally if Jerome Powell comes out and does hint a slowing of the interest rate hike pace is because the Nasdaq 100, the technology, which by the way is still the most heavily weighted industry in the S&P 500, has underperformed massively. And if we did see, the Fed come out and announce a slowing of the pace of interest rate hikes, what sector does that benefit the most? Arguably technology, and that could be what carries the S&P 500 to new monthly highs. So I'm bullish going into the conference. I think that you'll get a negative pullback and when a 0.75 base point hike is announced, and then as you go into the conference and the questions get asked, I feel like that's when Jerome Powell is going to hint that the pace will start to slow, and that's when you will see that